Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Dearborn. He's the Managing Director on Nasdaq's Market Intelligence Desk, and we're going to take a look at the month-end and longer-term performance of the Nasdaq 100, the NDX. Chris, it's great to have you with me as always. And
happy Halloween, Jill.
Happy Halloween, yes. Even though it's a little bit rainy, I think we're going to have a lot of fun.
I guess we're getting a little trick instead of a treat there with the weather, huh?
Yeah, although some really cool, interesting costumes in Times Square, that's for sure, and that's just on a regular day.
Yep.
Before we get into the Nasdaq 100 performance, let's take a look at what's happening with the market overall. Even though we're in the thick of earnings, we're back to trade and manufacturing headlines.
Right. It's the same theme that's come back into the headlines today because of the fear that China doesn't really trust the White House and the administration there on getting a meaningful deal done. So with that issue, and the main part of that is the intellectual property. Is that going to really take place, or is it going to be back to where we were at the beginning of the year with a deal? That spooked investors, even though we've got some decent performance in the stocks. We got good performance on the earnings across the board, better than expected so far for Q3. And you see that in the highs. If the macro environment can stay out of the headlines for a little bit, you will see the markets responding, and you're going to see that in the chart that we have here today.
All right, so let's take a look at our next chart here. It's interesting that we're talking about macro because after this week, earnings tends to wind down, and then you have the consumer names next.
Correct.
Next week, and that's going to be really key because we just got GDP a little bit weaker than expected. We have the employment report tomorrow. So if really what the consumer companies are saying, reporting, and guiding, that's going to be pretty key. But you're right, we're back to everything in macro. What are we looking at longer term here? Let's talk about first October's performance, and then we can look at this longer term.
Right. So the Nasdaq 100 made a 52-week high just a couple of days ago, north of 81.19. Great performance on the 28th, and it's led by a number of the names that you expect to be led by. Tech is moving this market, and with that, it's a risk-on environment. The problem with that is that you're seeing a convergence here right before the December lows, when the market sold off significantly back at the end of 18. You're seeing the higher highs being made, and you're seeing that triple top come into place here right now. Brian did a good job writing the chart up here today, and what you're looking at here is a possible divergence in the sector. And in technology, it's one of the leading sectors for the Nasdaq 100. So where tech goes, the Nasdaq 100 will go. The issue here is that you have declining breadth. So breadth is a big leading indicator of where the markets will go. It's a difference between what we're looking at here, the 52-week highs versus the 52-week lows, and what you're seeing here on the bottom is declining number of stocks making higher highs to move the market along. If we're looking to move higher, you still need stocks to continue to make higher highs, even with Apple making its all-time high recently, and a number of the other stocks on the back of earnings moving higher. The macro environment's putting a dampener here on that's where we're down a little bit today. An impressive number since the beginning of the year, right after Christmas, the Nasdaq 100 is up almost 90%. Right, you're coming into the last 2 months of the year. The question is, will traders start to take some money off the table here and lock in some of those nice gains, or will they continue to move it forward? If there's risk in the macro, if there's risk in the U.S. trade talks, if the NFP number doesn't look spectacular or even good enough tomorrow, look for people to start selling the winners, take the profits, and move on to the beginning of next year.
Yeah, I think, in addition to the consumer as well, the fact that we're seeing a decline in CapEx spending, that's a bit concerning to me as well, because sometimes you have to spend money to make money for future growth.
Correct.
And companies are not doing that at the level that analysts have expected them to. So outside of macro, really, where is the next leg up in terms of growth? And I think that's, at least the analysts and portfolio managers I'm talking to, it always kind of comes back to CapEx and what future earnings growth is going to look like.
Will the sector rotation, how will that affect tech here? Right, you're coming into Q4, all important for the consumer names, right? And we'll see that in probably if they give some pre-announcements in January, but really for the Q4 numbers, you'll see it late in Q1 and see how it really did. But a lot of the retailers will give you ideas of how well they're doing. And that'll give good sentiment. I mean, Black Friday is still very, very important, even though now it's a weekend event, right? Is the consumer still spending? And that's the key, right? Consumer spends 2/3 of U.S. GDP. We're not getting the 3% promise from the White House, but the 1.9% that we got the other day is a little bit better than.
It's slowing, but
it's slowing, but growing. And that's a universal theme that we're seeing in all the major markets across the board. The Nasdaq 100, especially the tech names, are multinational issuers. And with that, they can have a good view into how their products are being used and sold into broadly. So with political unrest, both domestic and abroad, with concerns over trade, whether it's import or export and manufacturing numbers, there's a lot to be worried about. The U.S. is still growing. There's no doubt about it. We're just not growing at the clip that we were following the last couple of years. It's been on a tremendous run since President Trump was put into office back at the end of 2016, and the markets have run since then. So why not a pause here for the moment at the highs? That's the question. Will we continue to move higher? Will stocks be able to move on individual basis, or is it going to be an overarching geopolitical theme that's going to sink us here? That's really the question, and that's been the ongoing theme since February.
Yep.
And that hasn't changed. Those headlines come in, and it's like a snap sale. The only saving grace here is that trading volumes are still relatively light, right? We're trending. The average trading volume for 2018 was north of 7.2 billion. We're barely doing 7 billion shares a day. That's a tremendous change and shift. If you take out that overhang of fear in the markets broadly, you're going to see higher highs, because then people will be buying equities for their individual alpha as opposed to conservative names because you're fearful of what might happen.
All right, we will catch up tomorrow, my friend.
Yes.
2:15 Eastern, as we will have information on the NFP number coming out. Thank you so much for joining me.
Thank you.
And thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.